Hey guys, Sara Strat Sniper here. What a week. Let's talk about it. Bull FOMO and meme stocks back on the menu. Be mindful heading into this week. We are heading into the end of the month and the end of the first quarter. So this next week we have 4 trading days left in the month of March. And then on Friday we will start a new month and the first day of the second quarter. All right, so let's get into it, starting with SPY monthly. We are still trading inside of February's monthly range. We know on the weekly we had our 2-2 reversal here at 432, and it's still going, still strong. On the daily, I said I would like to see some corrective activity, a pullback before trend resumption. Bulls are strong, so your next target is going to be 458, which would also be February's monthly candles high. So that's your target. No red flags unless we break last week's low this week, which is this white line. It's 440.68. Okay, so let's look at QQQ monthly. QQQ did take out February's low. We know that. We started coming back through February's range. So the SSS 50% rule is in force, which means our target is to become an outside bar. So we want to take out February's high. So our target is going to be 370 for that. On the weekly, you just had a 3-2 continuation. On the daily is interesting. We had an inside day setup, and you can see that the bulls could not wait to buy. They were waiting for a break of a previous day to buy. So we knew to be looking bullish, and we knew to be not taking any short setups because of this FOMO that we were seeing, and how we know that people got FOMO and were looking for a way to get in. They found it on 324 when we barely broke the previous day's low, and then it just went complete outside day. And again, your target for the Qs is 370 because that would make it an outside month. But this is where you need to be mindful that there's only 4 days left in the month and not 5. So we only have 4 days of price action to become an outside month. So time is always very important. IWM still stuck also inside of February's monthly candle. Week, the weakest one, closed red. Let's see here. The daily, this 2 down, 2 up reversal really didn't get anywhere. So you want to be mindful if we break this pivot low on the daily. That's also the weekly low. So if you break that, we're probably going to head lower. So that's your line in the sand right there, 202. You want it to hold that level. The VIX. The VIX, you know, has just been a great short since that Rev Strat right there at 28.84. That's still working and going fine. We'll grab this line. Your next target is 1993, which also would be the inside and down trigger on the monthly time frame. Okay, gold. I believe last week I said you would want to be long above 183.29. The problem is this range is so big that it was unlikely that this weekly candle was going to cover all that range again. So it went 2 up, but the bulls did not step up. However, on the daily time frame, I really like this setup. It's basically full time frame continuity. Okay, you have corrective activity right here. So if you're not a stratter, this is a picture perfect bull flag. So you would want to get in above 183, and I would honestly put my stop no lower than Friday's low, 181. 188 would also be a target because that's a gap fill. So gap fills are targets. So, all right, so back to the daily, a break above 183. And those are all your targets, 183, 185, 187, 188. XLE is pretty much doing exactly what we've wanted it to do the past several weeks every time we talk about it. Let's look here. So zooming way out on the monthly, we have hit our most recent pivot high target. So our next pivot high target is going to be 83.66. Last week we got a 2 down 2 up reversal, and that's just still in force. These daily outside bars show confidence in the bulls. They're not letting it go anywhere, and they're buying on a penny break of the previous day's low. So the previous day, so Thursday, was 76.55. We broke it by a penny, and then just the bots turned on, whatever, the bulls started buying, and it's just continuing up. Your next target, if you're playing the energy ETF, is 80.22. What else can we find in here? I'm scrolling way in. 80.22. Oh, that's why. Price will probably slice through this stuff real fast. Okay, here's what I'm seeing. You see all these, you have a pivot machine gun here. So the highs of all these are going to be your targets. Okay, wow. So I went back on the weekly all the way to 2015 to get my levels. Okay, so that's how you do it. If you don't have any price action nearby, you gotta scroll back in time. If you're not at all-time highs, there's gonna be price action. So you're gonna wanna look at those for your targets. Okay, so then now looking at it on the daily, if Monday we get a 3-2 continuation, you can take it. And then these green lines are all your targets. Bitcoin. Okay, back to the monthly. We are still a double inside month. Daily looks nice and healthy. Nice little uptrend. Could use a little pullback here before they try and break through that weekly pivot high and that inside month and up. As we know, a double inside month is what? It is a tightening range on a smaller time frame. Like this. So see how price is tightening up? And this is why, this is a great example of why the Strat can help you from getting in on a false like trend line breakout, because we know for certain we are not going higher until we break above this inside month and up, which is at 45.8. So we actually know that we have to break above 45.8 to actually get some distance and maybe see 48,000. Because sometimes, you know, these patterns will work, and sometimes in technical analysis, sometimes they won't work. And the reason that they don't work most of the time is because of the multiple time frame analysis and what's going on the time frame above it. So just something to think about. Okay, so I wanted to talk about AMC and what happened. Okay, and what had happened was we took out our pivot low at 1340. So if you were short on this inside month and down, that was your target. That's where you would have wanted to exit. And then that's when you're at downside exhaustion risk because you took out the target. So it's like, all right, we hit the mark. Now what? Now you don't know. Now you turn around and wait for a setup. And then what happened was you had that setup. we took out the lows, the 1340. You got a green 2 down week, which is what we call in conflict and bullish, and most likely signaling to a reversal. So then when we opened up this week and you got your actual 2 down, 2 up reversal at 1590, you knew what your targets were. You can even throw a fib and look at the 50% rule. So knowing that we were going to be an outside month could have helped you with your targets. And then just like normal, what we always do, when you get a 2-2 reversal, your targets are always the highs of the previous candles. So all of these were your targets. So I know, it's always, it looks so much easier in hindsight because it is, but learn the hindsight. Learn to see when you're at downside exhaustion. Learn to see when you see a reversal starting. A green 2 down means the ball is back in the Bulls' hands. Home team, they've got the ball now. They're in control. And this daily chart is just super fun. You could have even entered on this 2 down, 2 up reversal immediately after hitting downside exhaustion. Now that is a high risk trade, but it's also high reward because you can potentially catch the very bottom when you know what your downside targets are and when you're exhausted, right? So you could have gotten in at 1460 and I would have put my stop down here at 1293. And holy moly, the percent move. Let's look at it. So if you took this reversal at exhaustion, let's say you caught the outside month target at 21. That's a 48% move. That's insane, but we know how the meme stocks are and what they like to do. Now, looking at this chart, pretty much it looks like it did its job. It did what it's gonna do. The daily looks exhausted. We had a 2-1-2 that failed. So I would say if you break Friday's low on Monday, it might be a good exhaustion, high risk, short play. And then your target 1 would be 1886. Target 2 would be 1818. You get it. What else? Game. I wanted to talk about game. What happened there? Well, let's look at it. Basically the exact same thing. So see January's pivot low down there at 86.29. What did we do 2 weeks ago? We came and we took it out. So bam, if you were short from this 2 up, 2 down reversal, that was your target. That's where you should exit. And then again, what happened? You got a reversal at downside exhaustion. So the weekly long signal was at 97.45. Target 1, target 2, target 3, target 4. Now, it didn't quite hit target 4. It tried, got real close. And by comparing GameStop and AMC, GameStop is obviously stronger because we broke the pivot high and AMC did not. So yeah, it's always fun looking back and seeing, what you could have done and where you could have gotten in so you can learn from it going forward and look for these exhaustion reversals before they happen. So if big money was to get in, that's where they would be getting in on everybody's stop liquidity breaks, basically. That's where all the liquidity is when all those stops trigger. So if big money knew something, they would be buying here. And then we, as retail traders, know what reversals look like and we know what exhaustion looks like. So then we just want to hop in and ride that wave with them. So last week I said it was at potential exhaustion risk and that we had an inside week. And if we got a reversal, we would have to break 69.99. We did not get that. So even though we are at exhaustion and at the top, they're still buying it. It's still strong. The weekly long signal was a break above 71.93 with 72.37 being your target. And that's all I have to say about that. We are at all-time highs. So just be mindful that you are at exhaustion risk. If we break below 70.35, I would no longer want to be long this name.